Well, we happen to be approaching a dangerous breaking point in the markets, and there's many signals that we've been discussing on the Stock Market Break show that lead us to believe that we could see some more sell side in the market. In today's video, we're really going to break down what these charts are saying, levels to look at. We're going to get into expected moves, the current conditions of the markets, which is incredibly important. We're going to talk about futures and get into crypto too as well. There's going to be timestamps in the description. Before we hop into the show, I want to once again thank my Patreon community, all the patrons that support this channel for $9 a month. They get a bunch of extra benefits, and my partners, Interactive Brokers, an award-winning platform. If you haven't checked them out, click the link below and check them out. You can even click the IBKR campus, which has a bunch of free resources, including courses from beginner to advanced. They have Traders Insight blog, webinars, podcasts, and so much more. Let's go ahead and get into today's show. All right, ladies and gentlemen, welcome back to the Stock Market Brief Show. I'm starting off here once again because we did happen to see some more sell side in the markets, and back month versus front month volatility is still rather elevated over, or at, I should say, 20% above front month, back month, that is, above it. And when we typically get into these levels, what do you typically notice? Well, the last couple of times they were at these levels, we started to see the market consolidate and go sideways and pull back a little bit. So there is no surprise here. And as the market's pulling back, I would like to see this thing come off and maybe even come underneath that one, because if it does, that can offer up a potential opportunity where we've seen the market find bottoms in and around those levels there too as well. The put to call ratio here is relatively still lower. We haven't got the updated one for today. This is as of yesterday. But when we reach down into these lower levels, it does tell me that the market is in kind of an extreme bullish environment. And when it starts turning back up the prior two times, we did go through a market correction. You can look at the percent of stocks above the 20-day moving average and the percent of stocks above the 50-day moving average in the S&P 500. I know this chart might be a little crazy here, but the red line is the S&P 500. Red line is the S&P 500. And this is the percent of stocks above the 20-day moving average and the 50-day. And what this is telling me is, as this line goes down here in blue, while the stock market presses higher, it just indicates that more and more stocks are actually falling underneath these key averages as the market's being pressed up by fewer and fewer stocks. This is also known as a breadth indicator, and what this would mean to me is that the market's seen poor breadth. And when you get the market to have poor breadth like this, but it holds up, sometimes what happens is you can get a quick downturn in the market, but things get overextended very, very quickly, like it did over here, and you can see snapbacks when they get a little extended. So we'll be watching this chart. I'll be pulling my charts up. I just had this one on deck and talking about these throughout the week and the next week as well. If you take a look at the 11 sectors that make up the S&P 500, communication services led the way there. We'll talk about that one there momentarily. Consumer staples, which happens to be more of a risk off. And then we had consumer discretionary, also a leading sector. Basically, we had Google, we had Tesla that really led the charge there. As you can see, Tesla and Google both had big updates. Google had some news about some breakthrough quantum chip called Willow, I believe it was. And what did this mean for the overall markets, right? The overall markets happened to be down slightly. Even the VIX was down slightly. And what did we do? Was this an unexpected day? No, if you watch this show, I give you these daily zones here for the stock market. This is the SPY. And what happened? Well, we started breaking down and we came right into the daily implied move for the day. So did this meet its expectations for the market? Yes. Remember, 68% of the time it closes within this range, and it did so perfectly. We almost even came down to the weekly expected move. We'll be updating these levels momentarily. Take a look at the Qs though. The Qs is where it was at. Today we saw a nice move up into what? The upper daily implied move. And then where do we come down to? We reversed all the way into the lower implied move, almost coming into the weekly implied move for the day. So really, it was just a ping pong session here, and the Qs really did help drive the closing session there in SPY down to that lower implied move. Let's go ahead and take a look at the 10-year yield. The 10-year yield was slightly up on the trading session. The dollar was up on the trading session, and we talked about this on the prior video that when you get a rising dollar and rising 10-year yield, you typically do see the S&P 500 come off a little bit, as we've seen seen in prior times. I'm not going to dive into this one too much. We talked about that in last night's video. And if we take a look at the S&P 500 on the weekly time frame, holy moly, we're down a whopping 91 basis points, and we're still have not tagged the the weekly EMA, the 5 EMA here. So really, we're just getting a little bit of a breather after a rocket launch to the upside. Now, if you zoom out of this weekly time frame, it does get and paint a little bit different of a picture. You can see that the RSI is building a bearish divergence as price action is wedging. And when things get wedgy, right, markets move between expansion and contraction, right? This could be a bull flag, whether it's a falling wedge, gets tighter here, or if it's a rising wedge like so, it gets tighter and tighter at the apex. Well, that's kind of what we're doing right here. And if you go back through the last couple of, years, you can see other times where we kind of wedged higher. We wedged higher, and we also had an RSI divergence. We got above the 200-day moving average here by quite some distance, and then we snapped back down. This happened to be the pandemic. And then over here was going into 2022, where we wedged up. We kept pressing higher and higher, and we went through a bear market there before the 200-day started flattening out, turning back up and creating a new bull market. So things are getting, losing air. It's thinning air up here as we climb the mountain higher and higher, but it's still very much so in a bull market. Now, this is the weekly time frame, just so you know. This is the 40 EMA, which happens to be around the 200-day moving average. Now, we talked about we're approaching a dangerous breaking point. We talked about some of these charts, but I wanted to utilize this chart to really depict a very interesting picture here. And that's why I use it in the thumbnail. The red line happens to be the semiconductors. I'm using SOX, right? You can use SMH, whatever you want there. But it's the semiconductors, and then the black line is the S&P 500. And what do you notice, right? If you look at a 20-day correlation here, you can see we're above the zero line, which means that you're typically a positive correlated states. That means if semiconductors rise, the S&P 500 typically rises. And you can see that here because they moved hand in hand all throughout this time, no surprise. Up until recently, the semiconductors are losing some air over here, and the S&P 500 has been pressing higher, kind of leaving this gap right here. So one thing really has to happen, and that has to be if the S&P 500 wants to digest but potentially go for another leg higher, I think we're going to need the semiconductors to start to play ball here in the very near future, as they have just not been participating. Names like NVIDIA, right? It's one of the largest market cap names in the S&P 500, and its implied volatility makes a big impact on the price movements of the daily movements intraday of the S&P 500. Now, take a look at this. This is semiconductors ETF relative to the S&P 500. And yes, you can chart these relative strength lines. You can see other times where we broke out of bases and we went higher. We've, tight consolidations over here where we broke out higher and so forth. And what I'm pointing out here is known as a head and shoulders top. So what does this mean? What does the line mean? Well, simply put, when the line goes higher, semiconductors, right? SMH is the proxy in this one. Semiconductors are outperforming the SPX, and that's a pretty bullish sign for semiconductors. But what are they doing right now? Well, right now it's kind of on this head and shoulders neckline over here, and if it starts breaking down, a measured move could take us down into and around this range. And if it goes down, what does that mean? It means that the SPY or the SPX would be outperforming the semiconductors. Now, we know that semiconductors are higher beta, and yes, if this goes down, it doesn't mean that the SPY is going up, but the SPY or the S&P 500 may go down too, as we've depicted over here. But it might go down at a less percentage point than semiconductors. So really, the semiconductors really got to pick their head up here in the very near future. And I'll be honest, if you look at the absolute chart, so let's take a look at SMH on the weekly time frame over here. We broke out of a big base, right? Boom, we started moving up higher. Now the moving averages are starting to converge. And what you notice here is also another compression pattern on a weekly time frame. And it's like nearing the lower trend here. So what we'd like to see is this to obviously pick up strength and start breaking above this upper trend for potentially another move higher in semiconductors. So that would be the more bullish sign there. If you look at AMD recently cracked down a weekly trend line over here. So we'd like to see this one also recover in the near future, as AMD is an important name in the semiconductor space. Take a look at ARM. This one's also in a larger compression pattern here on the daily time frame. And you can might call this like, a pattern within a pattern. You have this sort of bear flag down here. But if we can start reclaiming these averages and potentially break out, that could also help the semiconductors out. If you look at Taiwan Semiconductors, another big player, you do have a series of higher lows. We do have a lower low right here, but kind of matching at the same time. We did have a lower high right here, but higher lows. So we're in this kind of larger compression pattern here. And it's not necessarily a bearish thing, but it may need more time to consolidate. And then we take a look at something like ASML, right? ASML got hammered from up here at around 1,000 down here to the 700s. But if you look at it, the MACD is starting to curl back around. We saw a lot of sell side, and it's in a larger wedge structure where we're trending lower lows, lower highs, but we're getting rather tight in and around this area. And if we start to break out, that might produce a pop to retest some of these averages above like the 30-week or the 40-week. Now, going into tomorrow's trading session, we got inflation data. Core inflation's out. This is what the market's been waiting for. Then the next day we get PPI. Next week, we get the Fed interest rate decision, which, by the way, on December 18th, when the Fed is doing the interest rate decision, make sure to watch the closing bell with the NASDAQ, because there might be somebody you recognize on the screen there. Wink. Wink. All right, let's get into the expected moves. The SPY. Okay, let's update them. So now that we have a CPI data coming out, what's the market pricing in as far as risk? Well, the lower zone would be down here at about 599.65 down to 597. That's the VIX implied move. This is the daily options implied move. And that would, if we got outside into these areas, we would be then outside of the weekly implied move. So if we really got to pay attention to how the market digests what this report comes out to be. But if it does come down here, it's likely to see us trade back up into this upper weekly expected move at some point. If we start rocketing to the upside, where would that take us? It would take us back up to a 5-day moving average, which is starting to flatten out here. It would take us back up to the month-to-date anchored volume weighted average price and the week-to-date anchored volume weighted average price, which is still declining. In yesterday's video, we said we had to start reclaiming these levels to feel more confident and more bullish. And you can see we did not. We started putting in lower highs. So what I would like to see, which is very common to see, is a tag of the weekly expected move every week. So I wouldn't be shocked if we come down there, but if we do, it's likely to trade in and around these areas, see some volatility, some scares, and so forth. If we look at the Qs almost dang near tag its lower implied move. It's right there at that month to date. It's below an inclining 5-day moving average at this current moment. So that would say more cautionary there. As far as the implied moves, we have 524.50. I'm rounding there. To the upside, you can put the exact levels on your screen if you just screenshot it. And then you have the lower daily implied moves down here in that range. As it stands right now, like I said, the move has almost been already tagged. But if we get way outside of it, it would be near a gap fill. And gap fills can potentially act as areas of support. It's in confluence with the lower daily move. So I would look to see if we come back up into the upper weekly implied move. Not to say that that's where it's going to be heading. The market really might like what it comes out as far as the news an hour, before the market opens up, and we might, fly higher if it comes in cooler than expected, right? IWM implied move. The lower daily would be right by that weekly implied move. If you start shooting to the upper side, it would bring us to and around the month-to-date anchored volume weighted average price. So we do have a lot of these names. They're underneath their month-to-date anchored volume weighted average prices, which is not a bullish sign overall for the market right now for this specific month. So Santa's not here yet, but hey, maybe after Christmas, he might arrive. Now, I want to get into the expected moves of the mega cap names, just to give you an idea where they stand within this picture and in this kind of framework. Well, we take a look at semiconductors. I wanted to pull this one up first because we talked about how semiconductors have been selling off and it looks kind of bearish. Well, we tagged today the lower implied move. So we're home now for semiconductors. That doesn't mean we can't expand through it, but it is worth noting that we've already tagged that lower move as we're going into this report. And sometimes, right, sometimes I can't guarantee this, but sometimes when I've seen this happen, things like this, and then all of a sudden the report comes out, it was the market front running the report, which could be the case because the market is a discounting mechanism. And then since we've already reached the move, we can see a potential bounce with names like semiconductors. So I'll be open to that idea, but I'm not really, I prefer to watch to see how the market digests the report before kind of just, throwing money into kind of a binary event. Now, NVIDIA, it's outside of its lower weekly implied move for the day. It was $5.97. Hello, we're there today. Now take a look at Apple. Apple tag its upper weekly expected move. So this thing has been on a monster move to the upside. And here you go. We're home in home base right now. Microsoft is rather flat on the week to unchanged. So we have a wide open move there. Google overshot its weekly implied move by 2 standard deviations given the context of that news drop around the quantum chip. Amazon has been on a monster run, slightly down here on the week. But I mean, does that look incredibly bearish? Would it be bearish if it came right down here after a move like this? Absolutely not. Not at all. Even if it was a 2 standard deviation move, I mean, you got to wonder, like, that would just be a 50% pullback basically from that big boost. Tesla, a little bit up on the week, still hasn't met its implied move, which is $27.55. And then you have Meta has been coiling up here. So look for Meta to make a little bit of a move, whether that's to the upside to reach its 21.13 or right back down here to the lower implied move. So that's what they look like for the week so far. Market conditions. This is where things get a little interesting because, like I said, we're approaching dangerous breaking points, right? A lot of the charts say that, but that doesn't mean we're gotta break. It doesn't mean that, right? If we take a look here at the net gamma chart, 6,100 is the call wall. The market's been struggling to get through that, right? Traders have been reaching up higher, but they've been struggling to get through 6,100. No surprise there. Sometimes you reach up to these levels, it has to come back in, refuel the tanks to come back up. Okay, the put wall right here is at about 6,000. So this would be the local support you really want to kind of hang on to in the near term. The gamma flip line is at about 60-20. Now, when we're below this, like I said, volatility typically increases and dealers, they sell into selling, they buy into buying, and that's what creates that volatility. But right now we're currently above the flip line. So dealers look to buy the dip and sell the rip. So we're approaching it, right? Near that breaking point. And then 6,000 happens to be in and around this area too. So, I'm bullish above these levels. But I'd be much more cautious if we start breaking down below, right? That's just how it goes. Now, to add another layer to that, we looked at the declining, or we look at the 5-day moving average in the direction, and the SPY, albeit it kind of got extended down to the weekly expected move, it did start turning red. So even if it bounces back up, watch the 5-day moving average and to see how it starts flattening out to turning down more. And if price can't hold through it, it could start a bigger trend, obviously, to the downside. And we'd want to see this kind of repair itself before feeling more confident. Semiconductors down here, you can see, is red. It started turning yellow over here, gave us the cautionary sign, and we saw some follow through. Now it's a little extended. So if we get bounces back up, watch the 5-day moving average, watch the direction, because it could still get knocked. It has to flatten out to turn back up to feel more confident. The Qs is yellow right now, so this is just telling us to be cautionary. That means, it's still inclining, but price action's below it. IWM, it's been red. We gotten above it a couple of times, but it didn't turn the moving average, right? Boom, it started following down further. And then we have DIA also. It started turning yellow and choppy up here, and it's been red since. So it's bullish environment, but with caution as we're approaching these breaking points. Once again, let's hop into the futures. Futures, right? We talked yesterday that would we be shocked to see a 50% retracement of this large move here? Well, we weren't surprised here when it came down into here. Would we be surprised if it comes down into these ranges? Absolutely not. And even if it does, it would still be at that point a higher low. So right now we haven't even came into the 20-day moving average. We're seeing a little bit of a pullback, which tells me just be patient out there, people, because if you try to buy the dip too quick, too fast, too much capital, and it drops again, and then you're like, oh, a little bit more, and then it comes down into here and you're like, I got to get out. And then all of a sudden it goes boom and starts bouncing back up. You get discouraged by that type of trade. And the only way that I know how to really kind of stay, encouraged is to be patient. And if I am executing, in breaking point territory, I'm using small amounts of my capital, right? I'm in a trade right now, XLE, and I've been trading around my position. I'm down. I only took a 3% position and then I sold 1.5% of it. And then I got back in another 1.5%. So I've been in that trade. I'm only down like 1.7% in the trade, and it's only 3% value of my portfolio, right? So I'm only using 3% capital of my portfolio. It's down 1.7%, but it's been falling like a rock, which would probably scare a lot of people, but it doesn't scare me when you position yourself correctly in these type of trades. Let's go to the next, NQ. NQ also off slightly on the trading session, but really, I mean, we're a couple of days separated from its highs already today, right? It made a nice move from that 50% retracement level. This is the one we talked about in the video, right? So what happened? It came down to it. We found a little bit of support. It's in that kind of golden zone area. So even if this comes off a little bit more, this is still one that saw a big move, and we're still consolidating these gains over here. So I wouldn't even be shocked if it comes down more, but I'm looking for the breakup higher, but I just want to see some strength before I feel, a little bit more confident. And then YM also down slightly on the trading session here, back to do the 20-day moving average, hasn't even made a 50% retracement from this prior swing low. So, if this wants to come in a little bit more, awesome. I saw somebody post about the 3 red crows over here and how it's bearish. Well, I mean, there was 3, white soldiers or whatever they call them over here too as well that led to a nice little rally, but now it's fading already. So I'm not reading too much into that. All I'm reading into is the series of current higher lows and current higher highs. And when I start to see strength, I start to execute into those various assets. Let's take a look at crypto. The sailor to shift tool came off quite a bit. It still hasn't reached sell signal territory. We'd have to close under this 0 line over here. This is the rate of change, the 4-week rate of change between Bitcoin to gold. And yeah, it came off a little bit. It got extended. The market's digesting. I'll keep an eye if it does cross. But even if when it crosses and closes, we have to wait for the trigger, or I wait for the trigger. And that means price would have to close or cross below the prior trading week. So we'll see what that looks like. But overall, if you look at Bitcoin, it's getting a little choppy up in these ranges. Are you surprised? I'm not really surprised if it wants to digest or pull in. I would actually prefer it to come in 85, 90,000, set back up, tighten back up, and potentially launch back for another run. That's what I would like to see. Is that going to happen? Maybe not. Maybe it will. But right now, we're kind of getting up at 100K. It's kind of going sideways as it stands. Ethereum took a little bit of a hit here too. We talked about this inverse head and shoulders pattern and how it could come up to and around 3,000 to 3,200. We came into this range and then we started firing off further. It's getting rather volatile up here, so I just prefer to wait for things to kind of calm down before executing new trades in this environment. That's all I got for you on today's episode, everybody. Hope it helped out. Make sure if you haven't done so already, check out Interactive Brokers and the Patreon community if you'd like to. By the way, you can save 16% if you just join annually. It's like $90, and then you get access to all the stuff there on the screen. See you later.